Good afternoon. Today we're going to speak about the FX market and look at how it's still risk on in our view, probably until the end of November, early December, when it should reverse down in a bit more of a risk-off environment. We'll start our analysis with Euro-US dollar here on an investor's view on fingraphs.com. An investor's view is a combination of a weekly graph for the perspective over the next few quarters, a daily graph for the perspective over the next few months, and an hourly graph for the perspective over the next few weeks. What we can see here is that the long-term downtrend on Euro-US dollar is still in place. It's not oversold yet. Our envelopes are still heading down, and our envelopes are not touching each other to the downside, which means that we're not in stress yet. So the downtrend continues possibly until early next year. The targets here are quite low, perhaps a bit too aggressive, but they're leading us towards parity or towards the 102s, 103s. The daily graph, and we'll come back to it on the Zoom later on, has been rebounding since early October, and we believe it is currently risk on. The hourly graph saw a consolidation early November, but seems to be resuming its uptrend at the moment. It should at least make it up to the low 111s, and possibly if it manages to make it above all corrective targets to the upside here at 111.35, then possibly into the 112s that we see here. But let's zoom on the daily graph, which basically has been rebounding. It was initially on the positive Brexit development early October. It had a first leg up, then a consolidation, and we believe it's attempting now a second rebound, probably into this zone here, into late November, December. And then it would reach resistance towards the high 111s, maybe the low 112s, and then in our view reverse down during December, possibly into early next year. Now we look at cable, and cable is still in a long-term downtrend. It's looking a bit more oversold on our envelopes here, with both our envelopes touching each other. The targets have been pretty much reached. They could still lead us down back below 120, but given the reversal of momentum that we've had over the last few months, it seems less probable today. That said, we are still not oversold on our oscillators here, and so there is a bit more leeway to the downside, and at least for a retracement over the next few months, possibly into early next year. Shorter term, on the daily graph, the uptrend seems to be in place at the moment. It has been quite strong since early October, and we believe it may continue a while longer. Our daily graphs are suggesting that we can make it up to the 133s, 135s. It does seem a bit aggressive at the moment, but there are still some leeway in terms of risk here, as we are still below the overbought zone. Yet, as a less aggressive projections, we would probably look at our hourly and zoom on it. And our hourly is still in an uptrend and trying to resume this uptrend at the moment. There's still some leeway on the oscillator, which is not overbought yet. And on the targets, it leads us up above 130 and possibly up to 131, 132. And we believe that's probably what we could expect into late December. Following that, we believe cable will probably also see some retracement during December following the euro down. Another currency which is a bit more cyclical, and we will also wanted to have a look at against the dollar, is Australian dollar. And the weekly graph is very similar to the euro. It's still in a downtrend here, and this downtrend probably leads us into early next year. On the target front, we're not quite there yet, and there's still some potential to the downside, maybe towards the 0.65 levels. That said, it probably has less leeway to the downside than the euro, and will probably bottom before the euro, as our risk index is now very much oversold and in the green here. And so we probably believe that from early next year, you will probably see Australian dollar versus the US dollar starting to rebound. On the daily, the chart is similar to the euro. We had a first move up here from an oversold condition, some retracement, and we expect another dead cat bounce, which is probably going to lead us back up to where we were about 2 weeks ago, into the end of November, and from early December, we expect this last move down to the downside to materialize. Shorter term, we'll also zoom on the hourly here. And it has been less strong than the euro in its rebound over the last few days, but we could see that we're already oversold here. So although projections are still quite negative, we believe it will probably stabilize and also attempt to retest up towards the levels we were at early November. Finally, we look at the yen, which is defensive, and the dollar-yen currency pairs, which is rather pro-cyclical. Our weekly graph is still showing some risk to the downside. The risk index is not quite oversold yet. That said, it has held up very, very well over the last few years, and we believe we cannot exclude that it could itself start moving up again, at least towards early December and possibly towards next year. So we expect this downtrend to possibly reverse over the next couple of months. Shorter term, we also reached a low towards late summer, so that was late August, September. We've hence seen a bounce. We're getting towards our corrective targets to the upside, so towards resistance around 110. Shorter term, we've seen some consolidation, and our view is that, as we can see here on the daily chart, on the hourly chart, that we are slowly getting into oversold condition, close to support here on this hourly chart, and that we could also attempt here a retest up, possibly into late November. We expect that the 110 resistance could be tested. Following that, we would also expect that dollar-yen retraces down into December as a risk-off trade. We wish you a very nice week, and thank you very much.